Are you buying a home and trying to decide if an FHA or a conventional loan is right for you? You're not alone. One could save you thousands while the other could cost you for 30 years. In this video, I'll break down the differences so you can make a smart decision when you're buying your home. Hey, my name is Matthew Parra. I'm a local mortgage broker here based out of Dallas, Fort Worth. I help home buyers all across Texas make smart money moves. I'm a homeowner myself, so I am in your corner wanting to help you make the best move possible. And in today's video, like I said, we will be going over the pros and cons of an FHA versus a conventional loan and which one is going to be best for you and help you get into your home. So let's start with the basics. FHA is more flexible, has looser guidelines on credit and DTI, debt to income. It's a government-backed loan, while conventional has stricter guidelines and is not a government-backed loan. Getting a little more into it, what do I mean stricter, easier to qualify? So let's break it down. Credit. FHA technically does go down to a 500 credit score. Now, while I say that, just because you have 500 doesn't mean you're automatically going to qualify, right? If you're below 580, you need to have at least 10% down. So in this case, you're looking at a $400,000 home. Your down payment alone needs to be $40,000, not including closing costs, unless we're able to have the seller pay for that. Also, if you're above a 580 credit score, you can get away with a 3.5% down payment, which is great. Getting a home 3.5% down. FHA also allows for a higher DTI, higher debt to income ratio. So while conventional has a hard cutoff at 50% back-end DTI, FHA, you can technically go up to 57 back-end DTI. And just a little disclaimer, just because you can do it doesn't mean you always should. Okay, now let's talk about conventional loans. Most people think you need to have a 20% down payment for a conventional loan. Simply not true. As a first-time homebuyer, your perk of a conventional loan is that you can put 3% down of your home price. And even if you're not a first-time homebuyer, you have a home and you want to buy another one, you can get away with 5% down for your home using a conventional loan. So I don't know where this myth came from. Very old back in the day that you need 20% down to buy a home. Simply not true. FHA, you can get away with 3.5%. Conventional, if you're a first-time home buyer, you can have 3% down. If it's not your first home, you can do 5% down using your conventional loan. Okay, aside from the down payment, let's talk about credit scores. This is what I mean by more strict. So conventional does have a hard cutoff at 620. That's not a me guideline, that's a conventional guideline. 620 credit is gonna be the minimum. And again, just like with everything else, just because you meet the minimum doesn't mean you will qualify. Conventional loans like to see higher credit scores. So the higher your credit score on a conventional loan, the better. Now, let's talk about PMI. If you put down less than 20% of your loan, you will have PMI, private mortgage insurance. Now, this is different from your mortgage insurance or your renter's insurance or your car insurance. Renter's insurance, car insurance, that's protect you. Something bad happens, you get in a wreck, whatever, right? Your insurance is there for you. This mortgage insurance is there for the lender. So just in case you default or you foreclose on your loan, they at least got a little bit of money each month for backing your loan. And so a little more on this PMI. On an FHA loan, since this is a government-backed loan, if you put down less than 20%, you have PMI, no ifs, ands, or buts. On an FHA loan, if you put down less than 10%, you have this PMI forever. There's no getting around it. It's a government-backed loan, they don't care. If you put down more than 10%, you have PMI for 11 years. Again, government-backed loan, they don't care about your equity, it's 11 years. Now, say that with an asterisk because how to get out of this FHA PMI is by refinancing into a conventional loan. Also on your FHA loan, aside from the PMI, there is something called upfront mortgage insurance premium. This is a fee that gets paid straight to the government for letting you have an FHA loan. No ifs, ands, or buts, no getting around this. You can either pay this up front as a part of closing costs out of pocket, Or what most people do is roll that amount into their loan. Okay, let's talk about PMI on a conventional loan now. So again, we know if you put down less than 20%, you have PMI on there, but conventional loans, it is dependent on your credit. So FHA, they don't care about your credit score. You can have 580, you can have 500, you can have 800. If you have the same loan amount and same down payment, each of those people are going to get the same PMI rating, whereas conventional rewards good credit. It is different. So now if you have 650 credit, or you have 800 credit, conventional loan is going to reward having better credit score. So on a conventional loan, it kind of gets to a point where does it make more sense to go FHA or does it make more sense to go conventional? Typically that credit break off is going to be around the 700s. It's not an exact science. Really, whenever you apply with me, we'll be able to do a screen share, do a Zoom, and see which one is going to be the best for you, FHA or conventional. But the good thing about a conventional loan is once you reach that 20% equity, the PMI falls off and it lowers your mortgage payment. So that is what's good. And you don't have to wait till you hit 20% equity from your original close date. If you refinance or your home equity has gone up, like you've been making principal payments and your value has gone up, then you could submit to the lender to have someone come out and appraise your home and request that PMI be dropped off. And it's great. No more PMI, lower monthly payment. Okay, now that we've gone over credit and PMI, let's talk about property types. FHA, you do not have to be a first-time homeowner. You can have a FHA loan previously. Let's say you moved and you rented and now you want to buy another home, you can buy a new FHA loan. Technically, FHA has a guideline where you can have two FHA loans at the same time, but they need to be at least 100 miles apart. FHA loans are not meant for building wealth, building an investment portfolio. They're really meant to help you get started, build that equity, and get going. But technically you can more than one FHA loan at a time, and you don't only have to be a first-time home buyer. Whereas conventional loans, you can buy a primary residence, you can have a secondary home, you can have an investment home, whatever. And each of those are going to have different down payments. Second homes, investment homes are going to be closer to that 20% or more instead of if it's your first house where we talked about doing that 3% or 5% down. And let's talk about property types and the appraisal. FHA, since it is a government-backed loan, the appraiser can sometimes call stuff out. I have seen FHA appraisers call stuff out like chipped paint, holes in the walls, or something similar like that. Really, they just want the home to be in livable condition. Whereas conventional, I'm not saying they won't call that stuff out, but they are a little bit more flexible on the appraisal and on the property type. Okay, so let's recap, see which one is best for you. FHA is going to be more flexible, have lower credit guidelines, and higher DTI approval. You will have that PMI for the life of the loan, which not really that big of a deal. Nobody's really in a home for 30 years these days. Let's talk about conventional. Conventional is going to be if you have higher credit, if you're not as worried about the DTI requirements, and you have that 3 to 5% down to be in the home, and you won't have PMI on there for the life of the loan. Each loan has its benefits, pros and cons. One is not better than the other. Really, it's just about what is best for you and gonna fit your scenario the best. Whenever we do our introductory call and we review everything together, we'll be able to go over both options to help ensure that you are getting the best deal when you buy your home and you know what to prepare for. If you're still not sure or you have more questions about FHA versus conventional and you're wanting to buy a home here in Texas, reach out to me. Let's get connected today and help you buy your home.